Let's see who blinks first. In fact, let's take the discussion forward with Anirudh, who's waiting patiently. Anirudh, who will blink first in your view? The market or the investors, traders who, kind of, not everybody is as smart as you, right, to act on that panic Tuesday. Everybody was expecting further lows, but it's not obliging the bulk of the participants market.
Yeah, hi Ajay. Uh, See, I would say that obviously, when you have all the noise around the election and the last couple of months, it was actually a very excellent time for the long-term investors because all the noise, it gave so much good opportunity to enter into some of the good companies at such valuations, which was not visible for the last 6, 7 months. So having said that, I think if you look at the flow of the money of domestic investors, I think the answer to your question is that definitely the domestic investors have understood that on the panic days you deploy. In fact, it's very encouraging to see that on the date of the election results, the domestic fund flow was almost like massive 22,000 crore, which was kind of a sorry, which was I would say was kind of a humongous number. So having said that, I would say definitely FI money will come back. And I think as yesterday, Mr. Jagam Desai, he mentioned that I think FI money in the next 4 to 6 months will start coming back.
Okay, that's one point. Anirudh, how are you analyzing the market in terms of risk reward right now? Where are you really witnessing the strongest risk rewards? Because everything is kind of doing well.
See, I would try to put this like, if I talk about the whole India story as if it's a kind of, you can say the Hollywood movie. I think the month of May was kind of a break wherein, you had all sort of noise, which kind of was an intermission in the whole India story which was unfolding. In fact, there are many people who keep asking us that, after elections, have you changed the portfolio? Are you looking at some of the new sectors? I think the whole India story, which we were kind of, building up over the last 18 months, that continues. And if I talk about the sectors where we are bullish on, I think industrial capex, it goes without saying that that is going to be the big beneficiary. Now, the good confidence part is that if you look at the cabinet formation, I think it's a very clear indication that the continuity of the government policies will be there. I think it's a very good sign which the government has given that continuity of government policies with the continuity of the cabinet ministers is going to be there. Definitely, you will see some kind of increased allocations for in the agri space or to increase the income in the hands of I would say the lower class. But definitely, the macro story about industrial capex, India manufacturing, domestic manufacturing, that will remain. So sector-wise, I think industrial capital goods remains our big allocation. Along with that, I would say investors should continue to have a decent allocation into the power and the energy sector. India remains a power hungry country. And with the type of growth which India is looking at, if you're talking about a 6, 7, 8% kind of a growth over the next couple of years, I think power sector is going to continue to see a lot of investments. And for a long time, I think for the next 5, 6, 7 years, you will see the even the I would say the coal-based energy also coming into play, which was not there for the last couple of years. So I would say power energy is again going to be a big theme. The third sector, which I would say we are very bullish on, is the real estate. We have been bullish. We had taken some profits off into some of the real estate names, but I think with the continuity of the PM Awas Yojana, I think the housing finance companies which are catering to the affordable housing, they will continue to do very well. We have some allocations in our portfolio over there. So you can say we are taking the real estate exposure via the affordable housing finance. And lastly, I would say the urban consumption, wherein I would say autos and the retail, that again is a large allocation in our portfolio and that will continue to do well. So nothing much, I would say, has changed post elections. Only one area where I would say we have started looking at is the whole agri theme, because I think government focus on that will increase. Having said that, the two areas within agri theme which investors can play, one is the fertilizer, second is the FMCG. Now, FMCG question always comes the valuations, but I would say that we are looking very actively on the volume growth, because only once we see some volume growth on the FMCG side, that is when we will be looking at entering those companies.
Anirudh, there is a question, in the minds of the market that how durable is this coalition, etc. Are there any, will we see a more accommodative BJP this time around, all of that. Is there a legitimate concern, or whatever happened, transpired so far in portfolio allocation, all of that, it appears so far that it has the makings of a durable, sustainable 5-year government?
Yeah, Ajay, I would say honestly that when it comes to politics, anything can happen. Politics is a game which I think nobody understands, and I think it's best left to the politicians to deal with it. But having said that, I think if you look at the long kind of political history of Mr. Modi after being while being the chief minister and then being the prime minister, I think he knows how to handle the cards well, and I think he has a good team. The good part is, I would say, the alliances who have come along, they are not very opposed to any of the policies which the government was looking at. That gives me comfort that there is a lot of kind of the liking of or I would say the like-minded people have come together. I would be concerned if there was a lot of kind of opposition on most of the BJP manifesto issues, and I think that is not there. So as of now, it doesn't seem that there is any concern, but I would say it's too early. We have just begun the next 5 years, so I think we'll have to see the wait and watch. But as of now, it doesn't seem that there is any concern.
Another, that argument which you were making about capital goods, clearly a lot of tailwinds are there, but what about valuations? And also, are you now digging deeper in mid cap, small cap, because the large caps have run up a whole lot in, or are you looking beyond the most obvious names in the entire power capital good values, value chain?
So yes, I would agree with you that in case of the capital good, there are many capital good companies, especially the MNC capital good companies, which you will find that they are very expensive on the valuations. But having said that, I think it's very evident that they have continued to do well in all sorts of markets. They have gone through the economic cycles. They have emerged much bigger. They have a strong parentage from which they get good R&D support also. So I would say that definitely those large MNC capital good companies should be there in our portfolio, and we also have it in our portfolio. Having said that, definitely in the last 4 months, I have increased small cap allocations in my portfolio, which is, I would say, to some extent against what is the general conception that small caps are overheated. I would say there's good value in good small caps even in this market. There are companies which are growing at 18-19% and you're getting it at 24 to 25 price to earnings. So I think there is no harm in getting into these companies. So when it comes to capital goods, yes, we are venturing into some of the mid cap, small cap companies also there. In fact, in the power EPC also, there are some good names in the mid cap, small cap space, which we have added in our portfolio in the last couple of months. And we continue to have those larger MNC capital good companies.
What are your thoughts on the consumer end of the market? Some people are spotting green shoots in the rural tier 2, tier 3 side. The view is that government may also put a lot of effort and capital there to ensure rebound. And plus, if any guide coming in from the con calls and commentary from some of the big consumer companies, are you trying to find some names out there in your portfolio or not yet?
See, I would say the market doesn't give you time to react. And, to be honest, if you look at some of these FMCG companies, it's yet very early that, volume growth has not yet shown. I think the run-up which you saw in many of the companies was purely kind of the valuation catch-up. Now, in some of those companies, I would say the type of movement you saw over a 1 week, 10 days period, it doesn't give you comfort that, you would want to jump in at these prices. Having said that, I think, yes, they are definitely on an active watch list. If you see the first signs of volume growth, because I think, this year the monsoons are expected to be good, and typically in a good monsoon year, along with the government support towards the Agri side, I think you should see the volume growth happening. And if that happens, I think many of these FMCG companies will see their multiples expanding. So yes, I would say that we are actively looking there, but whether to enter at these prices, I would say that as of now, we are on a hold.
All right, Anirudh, we'll let you go on that one. Thanks so much for joining us on the show today.
If you like this video, then like, share and subscribe to ET Now.